Welcome to today's What Moved the Market show. I'm your host Prem. It's Tuesday, October 28, 2025, and here is everything you need to know as the markets close for today. Let's kick off with how the indices fared today. The Sensex dropped 150 points to close at 84,628, marking a decline of 0.18%. The Nifty 50 settled at 25,936, down 29 points or 0.11%. The Bank Nifty, however, bucked the trend, finishing up by around 100 points at 58,214, gaining 0.17%. In the broader market space, both the Nifty mid-cap and small-cap indices ended nearly flat, showing resilience despite the benchmark's weakness. Volatility was the name of the game throughout the session, with both Nifty and Bank Nifty showing sharp swings before recovering smartly in the final half hour of trade. On the currency front, the Indian rupee remained under pressure, trading around 88.26 against the dollar. This represents a fresh weak level for the year, reflecting ongoing dollar strength globally and persistent foreign outflows that continue to weigh on the currency and import-heavy sectors. Turning to today's big movers, the gainers list was dominated by metals and select banking names. Tata Steel surged to the top, rallying nearly 4% alongside JSW Steel, driven by positive developments out of China that lifted sentiment across the steel sector globally. L&T, State Bank of India, Tata Motors, Kotak Bank and Reliance Industries also closed with solid gains. The star performer in the mid and small cap space was IDBI Bank, which skyrocketed 9% on heavy volumes, approaching its 52-week high amid fresh reports of strategic sale interests gaining momentum. On the flip side, the losers were led by Trent, which tumbled on profit booking after its recent run-up. Tech stocks took a hit with Tech Mahindra and HCL Tech among the top laggards, reflecting weak sentiment in the IT space. Bajaj Finserv, Bajaj Finance and Mahindra also saw notable declines, dragging down the financial services and auto segments. Checking the technicals, the Nifty spent most of the session consolidating between 25,800 and 26,000, two critical levels that continue to define the short-term trend. Both these levels held firm today, with the index respecting its immediate support zone. The key takeaway for traders is that as long as Nifty holds above 25,800, the bullish bias remains intact. A sustained close above 26,000 could trigger a fresh leg up toward new highs, while a break below the support might invite short-term weakness toward 25,700 or lower. In terms of sectoral action, PSU Bank and Metal indices stole the show, both gaining over 1%, boosted by the IDBI Bank surge and strong global metals cues. On the losing end, Realty emerged as the worst-performing sector, followed by IT, energy, financial services, FMCG, pharma, and consumer durables, reflecting a clear rotation out of defensive and rate-sensitive plays. On the regulatory front, SEBI made headlines with a proposal to ease norms for high-value debt listings and introduce incentives for debt investors, a move aimed at deepening India's capital markets ecosystem. Switching to commodities, it was a mixed day for bullion after the MCX exchange resumed trading following a rare 4-hour technical outage earlier in the session. Gold futures on MCX dropped nearly 3%, settling around 1,17,778 rupees per 10 grams, extending the correction from recent record highs. Silver futures also fell close to 3%, closing near 1,39,899 rupees per kilogram. Despite the decline, the Reserve Bank's continued gold purchases provided some underlying support, cushioning the downside in precious metals. Crude oil and base metals showed mixed movements, with steel-related commodities gaining ground on positive China news. On the geopolitical front, Asian markets traded mixed as investors kept a close watch on US Federal Reserve policy signals and the much-anticipated Trump-Xi meeting, which has been adding to global market uncertainty. These developments continue to influence risk appetite across emerging markets, including India. Looking ahead to tomorrow's session, the technical setup for Nifty and Bank Nifty remains constructive as long as they hold above their immediate support zones, 25,800 for Nifty and corresponding levels for Bank Nifty. A decisive move above 26,000 could unlock fresh upside momentum, potentially paving the way for new record highs in the coming sessions. However, traders should stay alert to headline risks around US Fed policy, global developments and domestic earnings, which could inject volatility. Keep an eye on sector rotation, especially the strength in PSU banks and metals versus weakness in realty and IT. Here's your actionable takeaway for the day. Given the strong momentum in PSU banks and metals, Consider focusing on these sectors for momentum plays if the broader market holds above key support levels tomorrow. At the same time, exercise caution in the real estate and IT spaces, which showed clear signs of weakness today and may continue to underperform in the near term. That's all for today's market wrap. If you have any questions or want deeper insights on specific stocks or sectors, send them in. Stay tuned for tomorrow morning's update, and until then, trade smart and stay sharp.